Hello, dear traders, you're on InstaForex TV channel with me, Kate Stichina. Yesterday, oil prices were trading in a downward trend, which was contributed to certain negative comments about the US-China trade war. Though the commodity managed to recoup losses on Wednesday afternoon, both crude benchmarks settled in the red zone. Brent futures declined by 1% yesterday, but today the prices recovered by 24 cents to $69.69 per barrel. A fall in WTI prices was less significant, so the spread between those two benchmarks narrowed to $10.5 from $11.1. On Wednesday, the American Petroleum Institute released the inventories data. It showed that the stockpiles of crude oil in the United States decreased by 5.3 million barrels in a week. Meanwhile, analysts predicted a decrease of 857,000 barrels. Surprisingly, the reaction of market participants to this news was neutral, though the report is surely positive. Late in the day, the Energy Information Administration will unveil the official inventories data that is considered to be more plausible and has a greater impact on the investor sentiment. Further on, traders factor in a decrease in supplies of crude oil from Iran. The preliminary estimates showed that the exports of the commodity from Iran fell by one-half to 400,000 barrels per day in May. Such volumes were last seen in April. However, the estimates may be inaccurate due to a lack of reliable data. On Wednesday, the Russian ruble fell again, though by the end of the day it managed to recoup some of its losses. The USD rupee tested the 65.35 level but failed to break it and retreated to 65 mark. Today, the Russian currency opened in the red zone despite rising oil prices and some currencies of some developing countries. The report on the current account balance put the national currency under pressure. At the end of the month, the volume of sales of the exports revenue decreased significantly, while the currency interventions by the Russian central bank remained in place. Additionally, the demand for the Russian currency is low as traders try to avoid risky assets amid uncertainty over the US-China trade conflict. We keep close tabs on the market developments. Stay tuned with us.